You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of education, throw in some strategy and some listener mail, some unusual activity, and you've got the heady brew that is the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-compelling Options Insider Radio Network. If you like this program, there are indeed a dozen others for you to choose from on the old network, so surf on over to wherever you find this fine program, including the mothership, theoptionsinsider.com, from whence all of our content flows, as well as iTunes and Stitcher and AHA Mobile, as well as our mobile app available for all those platforms, iOS, Android, and the Fire OS. No shortage of ways for you guys to find all the fine programs we're putting out on a regular basis. And certainly, if you like this program, there's a lot more on the network that'll be up your alley, including Volatility Views and indeed maybe the Futures Options Roundtable and a lot of our other fine programs for you guys to sink your teeth into. And joining me on the old program today, starting off with the man beaming in from the great state/principality known as Maine. You know him, you love him as the Rock Lobster, Mr. Andrew Andrew Giovinazzi. Mr. Rock Lobster, welcome back to the program, sir.
It is a thrill and an honor to be back here on the Options Insider Radio Network. And little birdie's telling me of a special event today. There's a special thing happening. Something special might happen.
Yes, there is something special, and you're not, of course, referring to our regular strategy block, which we have every Monday. That is also very special, but of course he's referring to the return of the Viceroy, the much heralded, much anticipated, much awaited return of Alex Jacobson, the Director of Education over there at Options Express by Charles Schwab, back to the old program after an extended 6-week hiatus. He's back and raring to go, and unfortunately joining us from that very cutting-edge 21st technology known as the telephone, a bit of a systems upgrade going on over there at OX. But nonetheless, he is back and raring to go. Mr. Viceroy, welcome back to the program, sir.
Mark, it is terrific to be back. I will tell you that in the time I was gone listening to the show, it was clearly the top of the list of the things I missed, and I'm very excited to be back, and I'm very glad to be back.
Well, I'm sure Tosaw will be happy to have you back as well, not just to have you back on the show, but also that means he doesn't have to do the trading patterns guessing game on a regular basis anymore. He was starting to, shall we say, fall behind in the hunt there on that game, so he needs a nice little extended break from that game. All right, and last but not least, joining us on the old program today, he is Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Oh, always happy to be here. Always happy to be here. Today's market kind of reminds me of the day when you see in a sign in some of the restaurants where they say, on this date in 1862, nothing happened. Yes. That was kind of today.
That is kind of today. But, given the tumult, the Rocktoberness we've been experiencing of late, I suppose a day of a little bit of quiet won't go unappreciated across the street. Gives you a chance to get your positions, get your book in order again before the next mega 1, 2, or even 3% move in one direction or the other.
There we go.
All right. With the gang all assembled for the first time in a while, fully assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, you know what this portion of the show means. It is time, once again, to break down the action, I suppose you can call it, in today's activity, what caught our eye, and as Uncle Mike alluded to, not exactly the most scintillating of days. Most of the major indices closing unched or close to it. S&P pretty much unched. The Dow and the Qs up about less than 0.25%. Not exactly the most rocking day compared to certainly the very, very active sessions we've had over the past few weeks. Figures Alex goes away for a few weeks and the market just lights up like it's going out of style. VIX cash ticking up a little bit as well, but pretty much unched on the day as well. And since he was on that extended hiatus, the extended hula vacation to Hawaii, we will give the Viceroy pride of place. Mr. Alex, it's been a long time. What caught your eye in today's markets, sir?
I was going to come in today with a joke and say I haven't watched the markets in 6 weeks while I was away, and they're about where they were when I left. Did I miss anything? But I was down with Regas today earlier. In fact, I hadn't been here for 6 weeks. I was kind of checking back in, and the desk had two themes today, one which was a little surprising to me. One was emerging markets had gotten some love again in the last few days. And Amazon, obviously on the big sell-off, got some activity, although it was relatively quiet today. It was up a little bit. But those were clearly two themes, and there was clearly some bottom fishing and some people selling the vol in Amazon. I know a lot of people thought it was going to trade lower, but other than that, it was a fairly uneventful day, and it was actually kind of exciting to be trading this market. I mean, well, one of the things in the period I was gone, it gave me a little more time to trade my account, and actually Mike and I spoke briefly while I was out. But one thing that surprised me in all the activity of the last 6 weeks was what happened to the 10-year. And I know we were kind of kidding about it when we did the live show that Mike and I have become bond brokers or bankers, but I'm shocked at the yield of the 10-year and seeing the 10-year actually get down below 2 briefly. I know that a lot of our listeners that's not relevant to, but boy, that had to have been a big trade for the folks who were long the bonds and watching the bonds rally. But relatively quiet day today.
It's funny. You're right. I was just looking at the chart while you were talking of the session from after our big live event in September, of course, and you were off from the following Monday after then, and they dipped to about a low of about 1978 on that following Monday, which is only about, it's still substantial, but it's only about 16 handles from where we are today. And then from there on, they went on the wild ride that we've been on over the past month. But you're right. If you did go away and just didn't pay attention for the last month and a half and just came back today and looked, you probably would say, hey, not a heck of a lot going on. Only down about 12, 14 handles since the last time I looked. So, it's kind of funny how much has gone on and yet how much is still the same at the end of the day. Interesting stuff. All about your frame of reference at the end of the day. Speaking of frame of reference, doesn't get much more twisted, much more bizarre than the diehard Mainer frame of reference. So, Andrew, in addition to scraping some barnacles and raking in some lobster and whatever else you guys do up there all day, what caught your eye in today's let's just call it Sea of Tranquility?
The Sea of Tranquility. Well, it wasn't totally tranquil in the Brazilian markets. They had a little, they had at one point down 8.5% on the re-election of Dilma. I guess if you're in Brazil and you're famous, you're a one word name. You're Dilma, you're Lula, you're I don't know. Giselle, isn't she Brazilian? Pele. But anyway, so that I think put a little damper on some of the emerging markets. This morning, it rallied back a little bit during the day. So we'll see. I mean, how all that plays out. But what the thing I thought is, I got a note from one of my clients who is what I would call a smart technical analyst guy, noting today is the lowest realized vol day we have had since September 23rd, I believe. It's the first. It's only a 13-point range in the SPX today. It's the smallest range since September 23rd, which is a little over a month. So, of course, in order for volatility to come in, volatility actually has to start coming in. So we are seeing a little bit. They're hitting the volatility futures a little bit today toward the end of the day. I mean, the vol products are actually up a pretty good clip today, but, you have that little rally back. But the market could not generate a big move down. It couldn't generate a big move up. And ultimately, that's what is a volatility killer. So we'll see if that trend can continue.
And Uncle Mike, in today's just explosion of action, explosion of activity, what really caught your eye, sir?
Okay, so just to reiterate on what I had mentioned in the opening part of the show, not a lot happened today. And to tell you the truth, I'm a little bit surprised. One thing that I was noticing in the pre-market, we were down a pretty decent amount pre-market today. So I was actually expecting that, not a huge amount by any means, but I was expecting a little bit more movement in the stock market throughout the day today, but we really didn't get it. We kind of just puttered around most of the day. First hour of the day was pretty interesting, but after that, it just kind of sat there and did absolutely nothing. So wait another day, and the degenerate premium sellers are the victors today.
Yes, to the victor goes the spoils, and indeed it was the premium sellers who seem to be getting the lion's share of the spoils today. Looking at what's cooking from an after-hours perspective, we are still in the teeth of earnings season here, even if a lot of the big ones have already reported, but a few still remain, listeners, including one I know a lot of you like to play in, particularly you degenerate premium sellers out there. That is, of course, the Twitter's TWTR closing today right at almost exactly at 48.5, which makes it nice when they close right at the strike. From a straddle perspective, it makes things much more straightforward. This is the name that of late, does fairly decent paper on a given day, doing about 175,000 contracts a day, doing 470,000 today. So very, very robust flow going into the number. We're still waiting, looks like, here in the after hours, and closing right, I said, right at that 48.5 straddle, and looks like that straddle went out 360 at about 380, 385 or so. So I'm sorry, 660 at 680 or so. So expecting a fairly decent move, which, given Twitter's recent history, is not exactly surprising. We'll see here. Looks like the number might be out now, so we'll give it a few seconds to digest, and then we'll move on into some other names. But still, an interesting one to watch. And of course, like you said, the volume lighting it up today. Alex, is it safe to say that was one of the big drivers over there at OX today, was Twitter on this relatively quiet day?
Yeah, everybody, Twitter, Facebook and Twitter, Facebook reports tomorrow. Facebook, Twitter, and GoPro have clearly become the momentum plays here. So, yeah, a lot of activity there, and it will be interesting because the trio will all report this week. Twitter today, Facebook tomorrow, and GoPro on Thursday. And clearly, market's got a laser focus on that group. And given what's been going on the last couple of weeks, kind of risk on, risk off, momentum in, momentum off. A lot of activity there.
And speaking of activity, just like the number is out, and looks like Twitter off about 4.5 or so in the after hours. So off to a good start if you are indeed on the premium buying side of the fence. If this move keeps up, you might get some decent swings. We'll see how this first blush shakes out and if this is going to be a protracted move or if we're going to bounce from here. But so far in the after hours, like I said, off right about 4.5, trading right around 44.20 or so in the after hours. I'm actually dipping down to about the 44 handle right now. So taking it on the chin a bit in the after hours. We'll see if this trend continues. Meanwhile, we're going to keep on rolling right on into our own odd and bizarre portion of the show. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time once again for the Odd Block, our portion of the show where we break into the weird, the woolly, the wild, the sometimes just bizarre paper that's lighting up our collective tapes. Going to kick things off with a fun one, a name, I don't believe we discussed this one in the past. This is Gentherm Inc., ticker symbol THRM, THRM, closing today $41.18, down about $1.20 or nearly 3% on the day, so not exactly the most aggressive, the most upside-heavy day for THRM. This is the name that does just a hair shy of 500 contracts a day, doing about 1,700 or so today. So a comparatively very strong day for good old THRM. And what caught our eye was actually a bit of a, I suppose you can call it maybe a time combo, a time risk reversal, whatever you want to call it. There's many different ways you could describe this one. But what caught our eye this morning were some trades going up in the no 40 puts to the tune of 154 of those going up. And then the D's 50 calls also going up 154 times for $1.80. As the day continued, more volume piled into those strikes to the tune of just a hair shy of under 800 contracts on each of those strikes. So 800 of the no 40 puts, 800 of the D's 50 calls, making a total of a whopping 1,600 or so going up on this one trade, given that 1,692 were all the contracts that traded out here. Pretty much all the action was in this one trade. What do we see? Well, it looks like paper was buying puts and selling calls. The puts went up right near the offer, the calls going up right near the bid. Usually a hallmark that someone's buying the puts, selling the calls. Again, this has all the looks of someone specking on a decent little collar here, perhaps out here in good old THRM, a time collar, if you want to call it. Another good description for this one. Many different terms we can use to describe it. But again, this has all the hallmarks of someone probably long some stock and looking to do it. Usually we see them doing it the other way, though. Usually we see them buying the put a little bit farther out, selling the call a little bit closer to the expiration. They're flipping the script a little bit this time, going nearer term for that protection, which makes this also a very interesting. I should say also that no put is right where the earnings cycle comes in, so there's some earnings premium built into that put. Mr. Rock Lobster, what's your take here on this? What do you want to call it? Time combo, time risk reversal, time collar. The choice is yours, sir.
How about a time collar risk reversal? Let's throw them all.
Time collar, the secret to time cop. I got it. We got a great script idea now. We're ready to go.
I was just thinking about that. Didn't I hear a movie something like that? Odd paper, looking like they're just dumping the calls and buying the stock. I don't think as a risk reversal it's too bad of a play. It looks like it's kind of tailor-made to sort of protect through the earnings cycle, probably against some long stock. Because it just went up. It went up in equal lot spreads after the 154 was like 50, 50, 50, 50, 50, 50. And so it looks like somebody that has a stock position just wants to finance the puts a little bit because they actually went quite close to the money for the puts. The no 40 puts, it's only $1 out of the money. So, they're looking for some protection there. And they decided to find it. So almost always that's a protective put play of some type. And it ends up just being it'll end up just being a collar for them. but they've got earnings. And I just noticing that this Gentherm, what do they do? Formerly Amerigon Incorporated. I don't know. A global developer and marketer of thermal management technologies for a range of heating and cooling temperature control applications.
It's always great when they've changed their name recently. Always a good sign.
It does. Gentherm. We're Gentherm.
The name, I first looked at it, I thought it was a biotech. Like, it has a very biotech-y name to it.
It does. It does seem to generate some money, though. So, I hate that fundamental analysis stuff with an option program, but they're just trying for some protection through earnings, and maybe and I think they did it the smart way, still leaving themselves a lot of upside.
Speaking of doing things the smart way, let's dive into this next one, because this guy seems to have knocked it out of the park. We're talking about Altisource Portfolio Solutions, SA. I know, one of my favorites. Can't really get my day rolling without my coffee and my newspaper and my check of a quote on good old ASPS. Closing today, $71.59, down about buck in the orders, or about 2.4%. But today's activity is not the story out here, at least from the underlying perspective, in Altisource. No. This thing, if you've been paying attention, listeners, has just been taking it on the chin. Just as recently as, about less than a week ago, it was flirting with the 100 handle, got up to almost right around 97. And as you can see, I said today is trading 71.5, listeners. So this thing has taken it on the chin. They had earnings on the 23rd, and surprise, surprise, looks like they may have even pre-announced, because the thing took it on the chin before the earnings. And so what we're here to talk about today is someone who played it fairly right, it seems. Before we even get into that, this is the name that does about 550 contracts a day, doing a whopping 5,000 today, so about 10x that. And this guy out here, just in the put strike, is laughing all the way to the bank. What do we see today, listeners? Well, we saw a bit of a close and roll, playing with some serious house money. We saw 1,200 of the Nov 95. Yes, I said 95 puts, listeners. And if you don't recall, these are about $23.5 in the money puts, going up 1,200 times. And then coming in and buying the Jan 60 puts, also 1,200 times. Actually doing those almost 2,000 times, and doing it for net of $19.80. Open interest in the Nov 95 puts, these $20+ in the money puts. Surprise, surprise, a little bit over 1,200. So this guy put these puts on. Try saying that 5 times fast, listeners. He put these on, and then the stock just took a beating. This guy is laughing all the way to the bank, to the tune of probably about 20 or so handles in his favor, or very, very near to it. But he's not done, though. That's the interesting thing, too. He's not just taking his money and going all the way home laughing, although I'm sure there is some laughter in his step these days, or laughter in his voice. He's also repositioning down to the 60 strike, so not as aggressive as last time when he was playing right around the at-the-money puts, but still saying, hey, you know what? I still think there's some downside left here, and putting on to the tune of 2,000 of these Jan 60 puts, so this guy has been right once already, and either he's got some money to burn or he's still feeling the lack of love for ASPS. But either way, this is one worthy of watching. Mr. Rock Lobster, I suppose you wouldn't mind a few of those 1,200 in your pocket, huh?
No, that was one of the deeper put rolls I think we've seen this year.
Yeah, I can't remember another one where the guy had it go that far in his favor. Not bad.
The stock did help him going from 100 to 75, though.
Yes.
That definitely helps.
That helps.
And Altisource Portfolio Solutions, whatever their solution is, they're having troubles. That was
Apparently their solution sucks.
They might have to turn their solutions onto their own stock price. But as far as I can tell, it looked like they were selling to close. There was a slight premium on the Nov 95 puts. At first, I thought he was buying those to close, but then I saw the price that the Jan 60 puts traded, on a hugely wide market, really close to the offer, very expensive on the Jan 60 puts. So it looks like just rolling, selling out whatever they had Nov and buying some January.
If he was buying those to close, he would have had no money left for the Jan. That would have been it.
Yes, I don't think he would have. You're really, if you're rolling them at that point, it's like, really?
Yeah, at that point, just give it up. Hand in your badge. You're done.
Yeah, I'm just looking at the pricing, and it looks like they paid full pop for the January puts. So it was a pretty expensive trade. So normally that's when customer is purchasing those. So all I can say is if those were his deep puts that he rolled, again, just prices right around a little bit, slightly over parity. Because there is some pretty good carry to the stock still for November. I think he's doing okay. Maybe he started this at 170. Who knows?
That would be something. That would be an interesting one indeed. Looking for our new sponsor here of the option block. That would be this guy. But you're right. Yeah, I mean, when you got this one, when you sit on this much house money, a nickel or dime here getting out. Not the end of the world. You're just happy to get out at that point. But yeah, this is a good one, listeners. We don't profile the smart money all the time. There's a lot of stupid money going up in the odd block, quite frankly. But today, this guy clearly knocking it out of the park. And from a put side, you don't see the put side that often. Usually it's upside calls all day long. But this guy knocking it out of the park from the put side, which is interesting. One more to wrap it up. Not quite as savvy, but still interesting nonetheless. We're going to roll on out now to Alaska Air Group, ticker symbol ALK. Closing today, $51.82, up about $1.60 or so, about 3% on the day. This is a name that does about 2,000 contracts a day, so roughly 10x our average odd block name. And going a little bit further than that today, doing 12,000 contracts today. So yet another robust volume day for one of our odd block specials. And in particular, of that 12,000, about 10,300 of them went up in pretty much this one trade. It was the Jan 50 calls. What first caught our eye this morning was one block of 2,300 going up. Paper selling for $3.70, as the day continued. Like I said, roughly 5x more piling in to the tune of 10,300 total on this strike on open interest of just 600 contracts and change. So this is all open in paper. Looks like it's a very, very 370 seller up here. Just pounding away on these calls until he got done, quite frankly, 10,000 times. So this kind of seems to fall into the script we've been talking about a lot lately of people looking a little bit farther afield, a little bit farther out for some names that can generate some decent income. And when they find it, they put a lot of money into those names to the tune of 10,000 contracts here in good old Alaska Air. Mr. Rock Lobster, take us home here. What's your take on this guy doing some size overwriting in ALK?
Yeah, I mean, that definitely was a size overriding play. Vol is down. I mean, there was quite a bit of vol in the airlines. I mean, they almost made a parabolic bounce for the last 2 weeks. Kind of crazy. If this was some savvy guy scooping stock, they're going to say it. And I just saw like offers at 370. There seems like there was a line in the sand where, they're just going to take the alt. I guess that's a 52-week high in Alaska Air Group. They're going to sell calls there and say, thank you very much. And that's what it looked like to me. Volatility, very at in the name here toward the end of the day. So just felt like a very dedicated seller at a price, and they're good with that. They'll take their money and go. I don't know what the yield. I didn't do a yield calculation on this.
It's about 7% if it goes all the way out to Jan, and he keeps all that.
That's not too bad.
That's not too bad at all.
No griping with that one. So and that's what you got. Not a bad play. I think taking advantage of higher volatility overall in the airlines and selling some juice.
All right, thank you for that, Mr. Rock Lobster, and that is going to do it for the old odd block. But I'm very pleased to say, listeners, that now it's time to go back to an old favorite. Yes, it's time to welcome back the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms. options, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody. I know it's been a while, but it is time once again for the Xpress Block. We have taken some forays into the Xpress Block in Alex's absence, usually to embarrass Uncle Mike Tosaw with some trading patterns guessing game. But I'm guessing he's quite happy that Alex is back today because he gets to take a bit of a hiatus from, quite frankly, taking a bit of a drubbing on the various names that we've chosen out there in the trading patterns. So, Mr. Alex, go ahead and do Uncle Mike a favor and fill us in on what caught your eye, what was lighting it up over there at OX today.
So I'm going to use the Xpress Block to talk a little bit about the Schwab side of the OX Schwab relationship. And obviously, as we've mentioned a couple times, I've been off the show for a while. But very briefly, I want to showcase the fact that Schwab has rolled out the 3- and 4-legged trade ticket. It's on Street Smart. And that's an exciting development because I know we teased it on earlier shows with the expectation that it would be coming 3- and 4-leg. If you're a Schwab customer, you could see the defaults going to the iron condors, the butterflies, the iron butterflies. But there's also a customization tab on it that lets you build whatever you want. And I know in talking to many Schwab customers, it's been something that they've had really strong expectations about and been looking forward to. And the good news is it is now here. I will expand upon it in a couple of the future shows, but very, very exciting news that 3- and 4-leg are now available on the Schwab platform. And for the Schwab customers who've been calling the trading desk to do those manually, a terrific uptick to now have it available on the platform.
I gotta say, hold on to those customers for grim life. If they're that motivated to keep calling up on a regular basis just to get those trades done, then those are very, very motivated customers. You want to hold on to those guys because, yeah, I probably would have given up the ghost a long time ago.
Well, it's exciting that it's here now.
Indeed. So listeners, and Alex is right, I know a lot of you guys are floating around out there using the Schwab accounts, and you always hear us talking about all the cool bells and whistles that they have over there on the OX side of the fence, and you keep saying, wow, the grass is so much greener over there. Why can't I get a taste of that myself? Where now you're finally getting a piece of that. So slowly but surely, all that cool functionality that we're talking about over there at OX land, you know, the Idea Hub stuff and the cool tools and the other stuff, and as well as just the additional spread execution type functionality is slowly making its way over there to the Schwab side of the fence. So I think that's really cool. And quite frankly, there's a lot of customers over there who could benefit from that sort of advanced functionality. So I'm glad to see that it's finally making its way through the corporate infrastructure, and the synergies of the merger are becoming complete. All right, thank you for that, Mr. Viceroy. Good to have you back on the program. It just didn't feel the same without you. But now, listeners, because it is the Monday show, and I think I forgot at the top of the show to tell you what the day is, so by all means, if you made it this far, you deserve the date. It is, of course, Monday, October 27th that we are recording this program on. That means if it's Monday, it's time for the Strategy Block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, you know the drill by now. The Strategy Block, that's the portion of the show where Uncle Mike grabs the old smoking jacket and the stone tablets and perhaps the bubble pipe if he's feeling frisky, and he comes on down from the old mountain to dispense some options wit and or wisdom. I have a feeling, you know, my minions have been on hiatus a little bit as well, so I'm just going to go out on a limb. My birdies, they're already useless. I replaced them a long time ago. I'm just going to go out on a limb, and I'm feeling something, Uncle Mike, in my gut. You can tell me if it's right. I'm feeling diagonals, but I think because we talked about diagonals before, I think you're going to tweak it in a way that the listeners may not be prepared for. How's that for a gut feeling?
Oh, you have quite the good gut, and I think your minions are working very hard for you. You should give them some type of a stock option bonus on the Options Insider company,
or just delicious jams and jellies that always seem to work in the past.
Okay, that makes sense too. Cheap labor that way, right?
Exactly.
Let's say right now that you're looking at XYZ stock. You like XYZ stock, but you know what? Just a couple of things that are concerning you right now with XYZ stock. The main thing that's concerning you with XYZ stock is just the overall market conditions in general. This is something that may be of concern to you. We've had quite the volatility over the course of the last few weeks. Alex wouldn't know because he hasn't looked at the market, and so to him, everything looks just like it was since when he left. But in reality, we've had our ups and downs, to say the least, in this marketplace the last few weeks. And let's say that you subscribe to the thought that a sinking tide lowers all boats, meaning that even if you do have this wonderful stock, if we have a down market, it could hurt your stock, and that's something with which you're concerned. Now, there's a couple of things with which you can do from an option trader's point of view. Let's say normally one thing with which you would consider is possibly selling a put to get into XYZ stock. XYZ stock's at 50. Perhaps you want to sell the 45 puts to get into the stock. And by doing that, if the stock stays above 45, then the put expires worthless. You get paid. But if you get filled, or meaning if you get assigned, meaning if the stock goes below 45, then you want to own it at that price anyway, and you get paid to do so. Now, this is where the plot thickens a little bit. You're a little bit concerned of the down market in that if it goes to 45, yeah, I feel okay about that. But last week, XYZ went to 38 and then right back to 50. Does that mean it's going to go right back to 35? Well, I think I have an idea that might help you if you're in this type of predicament and you're just not comfortable getting into the stock right now. Now, let's say, for example, that you were looking to buy 100 shares of XYZ stock. Obviously, if you were looking to do much more, you just multiply the numbers out further, because I'm just trying to do this from a conceptual standpoint on the day. Your risk would be $4,500 if you were to sell the 45 puts, not your maintenance requirement, your actual risk. Your maintenance requirement for the short put would be much less if you have a margin account, but what I'm referring to is the actual risk involved in the trade with which you're concerned at this point in time. Now, instead of looking to sell a put, or perhaps buy the stock and sell a covered call, or just buy the stock, one thing with which you may want to consider is buying perhaps a 6-month option. What a 6-month option would do, and by option, I'm referring to a call option because you are bullish on it, what that would do is reduce your risk on it when doing it by comparison. So, for example, instead of risking $4,500 to $5,000 with selling a put or buying the stock itself, you could risk simply around maybe $500 to $1,000, depending on the cost of the actual 6-month call itself. Now, which call should you select? Which time frame should you select? That's a topic for another strategy block. But when I'm in this predicament or in this situation, I typically like to go fairly in the money. The concept of that is that you're trying to simulate a stock in the best possible way. So let's say that you want to risk perhaps $1,500, and that's your maximum risk on the trade. So you buy this call option for, I'll just say, $1,500. When doing so, you've greatly reduced your risk in the underlying, because now if the stock goes to zero, you're only out $1,500. And if you were selling a put or buying the stock, you're out over 3 times that amount. We're going to say that the call is pretty far in the money. The reason that I like to go pretty far in the money when doing a diagonal spread is because of the fact that sticks and stones can break your bones, but extrinsic value and time decay are the only things that match. Intrinsic value is completely bulletproof and immune to time decay. The only thing with which time decay can hurt is the time value. And if you have an in-the-money option, then that is 100% bulletproof from time decay. If anything, the only thing it could do is help you, because in theory, if volatility went up and you had this long call option, and then let's say volatility goes up at a level greater than time decay goes down, it's only going to benefit you. It's not going to benefit the intrinsic value, but it's going to benefit the extrinsic value. So, know your enemy when doing this trade. Whenever doing any trade, know your enemy. If you buy a stock, your enemy is the bears. If you short a stock, your enemy is the bulls. In this situation, your enemy is time decay and perhaps sinking volatility. So how do we combat against those enemies? Well, the way with which we can do it is perhaps selling some calls against the long call that we have. Let's say we bought this long call option 6 months out. We can sell near-term premium against it in a similar way with which we would do for a covered call. By doing that, we're actually creating trades that are time decay neutral, or perhaps even time decay is working in your favor, depending on how you set up the call options. The main thing with which I want to emphasize on this is that if you're concerned about the stock going down or you're kind of nervous about getting into it, don't leverage yourself. And this is the most important point of today's strategy block. Remember, I'm doing the comparison of $4,500 to $5,000 to $1,500. And in a lot of cases, I think it would be less. It just depends on the stock itself. But I'm doing that comparison. Where you will get into trouble doing this is if you're trying to do, well, you know what? If I can just spend that $4,500 on a 3 lot, well, then I'm going to be a lot better off if the stock goes up. Well, guess what? You're absolutely right. You probably will be. However, the downside is you're going to be a lot worse off. You're leveraging yourself. And by leveraging yourself, you're taking away the whole premise from which you wanted in the first place, protection. So when you're looking at perhaps buying some stock and you decide to buy calls instead, understand that if your corresponding deltas or contract sizes, whatever way you want to look at it, there are two different ways to look at things like this, just depends on what you're looking to do. If they are something with which they are leveraged, then you're taking away the premise with which you're using options for in the first place. Now, let's say you're thinking, you know what? I want to make better use of my capital. I'm confident in this stock. I can afford to lose more money. I'm going to leverage this a little bit. Then by all means, be my guest. So if you are looking to possibly get into stocks right now, you're concerned about a down market, or you're concerned about this being the big one, or whatever the case may be, this is a way with which you can get some potential upside and then use the option product as a way to protect yourself against too much downside.
All right. Thank you for that, Uncle Mike. Good stuff. As usual, we always love our time here on Mondays where we could dive in deep into some strategery. All right. We got a few minutes here, so I think we have time for one quick listener mail question. So without further ado, let's dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Usually we do a lot of mail on Thursday, but every once in a while we like to squeeze in a listener question or two here on Monday as well. So many of you guys always writing in with such great questions. Hate to keep you waiting, just like we did with our friend here, Mr. Richard D. I maintain he wrote into the wrong program on the old network, but he maintains this is the one he wants to answer his question. So c'est la vie. We'll do our best here, Richard, even though you probably would have been better off on some of the other programs on our network. He writes, I have 3 questions that hopefully you can read on Volatility Views or the Option Block. I'm wondering what the key reports are that affect the agricultural futures options. He puts in parentheses, corn, soy, wheat, etc., and where I can get more info and track these reports. Also, do options on these ags typically behave the same way equity options behave leading up to an earnings report? Finally, what are the most liquid futures options besides gold, silver, and oil? I don't typically listen to the Futures Options Roundtable, which that's the show I would have recommended you right into there, Richard. But he says, because the episodes I have listened to are a little bit too deep for my level of knowledge. Thank you all for your great work. This network is a fantastic resource. Well, you're welcome, Richard. And this isn't really the right program for this, but we'll do our darndest to help you out here. First off, the key reports that hit the ags, obviously those are the crop reports. There's a lot of different services out there that will aggregate that data for you. There's AgWeb, there's a bunch of others. Anything that you look out there and that can aggregate those USDA reports are the places you want to go. I mean, I could list a bunch of them here, but I think in reality, you're better off looking for, perhaps search for the specific product you want, like let's say the soybeans report, search for that, and you can find different services that really specialize in that. There are general ones as well, but clearly the crop reports are where the lion's share of the action is. There's other stuff as well. There's different types of outlooks and weather predictions and things like that also will move the underlying, but the big key drivers are clearly the crop reports. Do they behave the same way equity options behave? That's another good question for our Futures Options Roundtable program. We've talked about that a lot. You say it's a little bit over your head, but I really encourage you to go check out that program, or at the very least, our long and short of Futures Options program, where we get into a lot of that material on a very regular basis. The thing you have to realize with Futures Options, we talked about this on this show once or twice as well, is that the skew could very often be very different. We talk a lot about products on this show, equity and index options that have investment skew, of course, premium to the downside puts a little bit less premium, a decrease to the upside calls there, and that results in that typical slope you're used to seeing from a skew perspective. The commodities are all over the board. The commodities could have that smile skew where, they're taking a bid from a volatility perspective in both directions away from the at the money. They could be biased in one direction or the other. So it depends on the particular one. In fact, if you listen to our Volatility Views show, we've been getting into a lot of that lately and how much the skews are vacillating in a wide variety of products, the metals, the energy, the ags, other ones as well. So there's no one skew that every product exhibits. It changes on a regular basis. I think the 10-year is a good example. We were talking about that recently. That one was pretty much a straight up smile. Then they got a huge bid to the calls. The energy and oil, crude, has had a huge bid to the puts for a long time. Looks just like an investment skew. So the key driver there for a lot of the performance aspects is going to be what skew your product is exhibiting at the time that you're trading in. That could change quite a bit. So I would encourage you listen to other programs like Volatility Views as well, because we get into those products and those topics on a regular basis. One more last thing really quickly. You said, what are the most liquid futures options besides gold, silver, and oil? You hit the big ones. The only one that jumps to mind right now, of course, you mentioned the corn. The corn options are very deep and very liquid. I would definitely recommend taking a look out there as well. All right, we got a few minutes here, so I'll let my other cohorts dive in. Maybe Uncle Mike, will start with you because you trade the metals mostly on the ETF side, but you do dabble on the futures option side as well every once in a while. What do you have to say here for our friend Richard D., who I maintain wrote into the wrong program?
Well, Richard, one thing that I would say on here, just to kind of reiterate what Mark had said, there's the variety of info out there. I would definitely recommend checking out the other show that he had mentioned, the other shows that he had mentioned. I don't think there are no bad shows on the Options Insider Network, and I'd say that with all sincerity. In terms of liquidity, typically what I like to look at when I'm trading options on futures, and I really try to shy away from illiquid options because, unless I know I'm just going to sit and hold them till expiration, which in the futures world is something I would definitely not do. But I like to look at oil. You could say that one's fairly liquid. The S&P Mini, I think that one's pretty liquid. The options on them anyway. The 10-year note, giving a shout out to my friend Alex, have to mention anything on bonds, and just like what you had mentioned. So I think you should listen to some of the future shows. I think that would be great.
Appreciate the plug, Uncle Mike. We do endeavor to make those shows palatable to all levels of different expertise in the futures and futures options realm. But I agree, sometimes we get into the rabbit hole. But that's kind of the fun of those shows, particularly for a show like Futures Options Roundtable. Only get to do it once a month, so we really dive deep into those. You hit the financials. I should have said the financials off the top of my head. Those are, of course, very deep and liquid futures options products as well. Mr. Andrew, anything you want to add here for our friend, Mr. Richard D.?
We have clients that mostly they trade future options, oil future options. They trade treasuries, euro, and gold and silver. So mostly gold. So those do work pretty well. I don't know of any of them that actually trade any of the ags, but they do get pretty good performance. And of course, you get a little bit more favorable treatment with future options, depending, or with the futures, depending on leverage or your leverage wants or needs. One thing I would say about all the future options is you have to be careful about the expiration cycles. They're all a little different. It's not like, an equity option, they all kind of expire on the same day. There's different expiration cycles, probably based around the reporting cycles for crops and things like that. So check and make sure you get your expiration dates kind of squared away, so you kind of have the right option with the right underlying future for whatever you want to do. So there's there's only like 2 levels that you have to learn there for that, but after you do, I think you would be on your way.
Mr. Viceroy, anything you'd like to add on your first mail block back from Hula hiatus, I should say?
Yeah, a couple of things. Number one, sign up for a free account at Options Express. And Mike Zaremski, who runs our futures desk, does a daily newsletter called Espresso, which looks at crop reporting days, planting, things of that nature. Andrew made a really good comment about understand settlement, because a lot of people go from the securities option side to the futures option side and think things are the same and then get some real nasty surprises. And Mike pointed out, you don't want to carry a futures option into settlement because you're going to end up with a futures contract, which is something you don't want. The other thing I would add, in addition to looking at what's going on in the United States, you got to look at the weather of what's going on and the plantings of what's going on in competing countries. So you start to think about, the domestic products, and corn is liquid, as you mentioned, and some of the other grains are liquid. The beans are liquid, but if you're going to trade corn or beans, you want to get a sense of what other countries trade them. And all of a sudden, if there's a monsoon in the Philippines, what does that mean to the price? Because even though the weather's good here, the weather may be poor in another country. I'm not trying to make light of natural disasters, but that can impact the price as well. Even in the metals, you got to keep a handle on geopolitical events and what's going on with interest rates. So you really have to have a worldview today. The other caution I would give you is, even though some things trade a lot and have decent open interest, there are days when volatility gets to extremes, and many of those markets can go thin. So please don't confuse open interest with liquidity, but get a good handle on everything Mike and Mark and Andrew talked about, but especially settlement, especially plantings and weather.
All right, that just shows the depth of our commitment to our listeners here on the Old Options Insider Radio Network. Even when they insist on writing in to the wrong show, we will still endeavor to answer their questions. But indeed, check out those other shows if you're up for it there, Richard, because we get into a lot of this stuff in a lot more detail, certainly than we have time for on this program, because it's time to keep on rolling right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, this means it's time for our final check-in and tell you what we're watching for the rest of this week. As we're paying attention to this, of course, let's do a final check-in on Twitter. Still down about 4 handles or so, 4.5 actually in the after hours right now, hovering right around the 44 handle. So it looks like the big move has petered out around the 44 handle. We'll see if it continues or if indeed all those close to $7 straddle traders are going to be unhappy fellows tomorrow. Also got a few big earnings coming out later this week. Of course, Facebook and Electronic Arts coming out tomorrow and other big names. And then near and dear to our hearts here in the space, and of course to our listeners' question, our writer in here, our listener, CME on the 30th. So a lot of names still to watch for the rest of this week. Mr. Viceroy, we'll start with you. What else is catching your eye? What else are you watching for the rest of this week, sir?
Looking at market liquidity in general, and I know that it's kind of an opaque term, but I think part of the volatility we had over the last 6 weeks was genuine volatility. But I think part of the liquidity we had over the last 6 weeks had to do with the character of what high-frequency trading has done to the dealer community, what you might want to call a specialist or market maker community. And I think we saw thin markets on some of these days. We didn't see, I mean, systems get tested, but I think we saw the new liquidity model get tested, and that's part of what's going on. And when you see these kind of risk-on, risk-off days, it's not only the investors that are risk-on, risk-off, but I think you found many of the dealers, and especially some of the liquidity in the dark pools and on the smaller exchanges, dried up. And I hate to be that blunt about it, but I'd be I'm looking at what's going on in liquidity, and when I see that 10-year rally, when I see the sovereigns rally, I'm beginning to be concerned that markets are going to get thin then, because it's a rush to safety. And I think until this market kind of rebalances itself after the last 6 weeks, there are going to be liquidity concerns, and I would keep an eye out for that. And as I say, the way I look at it is I look at how volatile the sovereigns are. German 10-year today, based on the yield, did a 32 realized bow. And Andrew talked about how the S&P, today was the quietest day in a long time. But look at the volatility in some of those other markets, and that gives you a sense of money rushing in, money rushing out. And if you're in positions when it's rushing out, be aware that the thin markets, I think, are going to exacerbate the moves.
All right. And Mr. Rock Lobster, what are you watching for the rest of this week, sir?
I'm watching Brazil, see if they can get out of the basement. I am watching just the broader market. It does feel like we've got a little, don't we have a FOMC monthly pronouncement from on high about what the Fed's doing? There might have been, I think there might be some under the current hope, so to speak, that the Fed might say, well, maybe we're just going to hold back on this QE taper thing for a while until Europe gets their act together. But, we could be doing that forever. So I think that we might catch a little vol around that, mostly as the Fed, I believe, will stay their course. I could be surprised, but they'll just kind of stay the course, continue tapering till they're done, and then look to see what they do with rates in 2015. So I know we got a huge rally off the bottom from that a couple weeks ago. So I think we might get a little action from that this week come Wednesday.
In addition to what my hosting colleagues had mentioned, I'm just also watching to see if we can break through this 1970 mark on the SPX. I think that's kind of the level with which we were at the upper end. I think 1970 is a key number, and see if we can get back through it or touch it and go back down.
All right. Thank you for that, sir. And of course, that's going to do it for us here on the old option block for today. But before we go, as always, let me check in with each of my cohorts, my partners in crime, to see what they have cooking that may interest you until the next time we can all gather here together around the old all-star panel. Mr. Lobster, we'll start with you. What's coming down the pike in the land o' the pit?
A big event on the back of our trading volatility for direction. We have our class on November 8th, where it's regularly $147, just $47 for basically learning how to use volatility. I have to say, very similar to what Tosaw was talking about, using spreads, using volatility, try to get the direction you want, but try to reduce the risk and give yourself some theta positive action if the situation warrants. And that is a teachable skill. So that's what we'll be doing in our class, basically using options to trade for direction. And it's 150 minutes. It's a great course, and Mark and I will be teaching it on November 8th at 9:30 a.m. Eastern time. So that'll be on a Saturday. Grab yourself some coffee and come in and check it out. There is a free webinar that Mark posted as a pre-webinar. It's on our website at www.optionpit.com/events.
All right. And Uncle Mike, what's coming down the pike in the land of RCM?
Getting geared up for Miami coming up on the 12th of December. Make your plans now. Visit our website to check out more info.
All right. And last but certainly not least, Mr. Viceroy, it's been a long hiatus. I'm sure you have a lot of stuff to catch us up on. What's coming down the pike in the land of Options Express by Charles Schwab?
I'll just showcase a couple. As you mentioned, I haven't put any events up yet, but I will be putting up a full calendar now that I'm back. And I've got a bunch of topics working. In addition to the hub, we're going to be talking about a quantitative Greeks class, which is pretty interesting. But the next couple events, Wednesday, the 29th of this week, Nina's going to do part of her continuum She does ongoing education. Wednesday's topic is she's going to look at short puts, selling puts to acquire, selling puts for income. And then on Thursday, the 30th, Nina's going to do order entry and a topic I haven't talked about in a long time, the walk limit. Walk limit is an exclusive feature here, which essentially lets you work the order on the OX trading system for those of you who had multiple orders working in multiple markets in all this recent volatility. You need to take a hard look at a product like walk limit. It's a massive time saver. Not only can it be a large money saver in these markets, but it's a massive time saver. And when markets are going nuts and vol's big and markets are thin, sometimes time is the most valuable commodity. The next live event with Jimmy Rouzan and his crew is Saturday, November 8th. They're going to be up in the Detroit area. Come to optionsexpress.com. All the educational events are free. You don't need an account. You can register for an event, attend a webinar. Optionsexpress.com and click on the education tab.
All right. Thank you for that, Mr. Viceroy. Good to have you back on the program. Hopefully we'll get you back on via the lovely 21st or at least late 20th century technology known as Skype on the next episode. And on behalf of the Viceroy and Uncle Mike and, of course, the Rock Lobster and myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.